Loveness who? Loveness who?
Madimusa.
Loveness Madimusa. Loveness Madimusa is one of the learners here at Gnostic Academy. In this video, we are going to show you how to prepare the trading and the profit and loss account, including the balance sheet. In other words, we are going to prepare to answer the income statement and the financial position. Okay, the statement of the financial position, which is the balance sheet. All right, so this is the paper we're going to use to answer the questions. This is 2022 grade 9 examination paper, business studies under external candidates. All right, so without wasting much of the time, let's jump right in and solve the question. Now, as you can see on the screen there, it is written, the following information was taken from the books of NPZ Limited on 31st August 2021. Okay, 2021. So you have a list of items, as you can see there. There is the K, which is on the left-hand side is for Kwacha, then the N is for Ngwe. Why Kwacha and Ngwe? Because we are in Zambia and the currency is Kwacha. All right, and the list continues up to the last, up to the end. Then you're required to prepare. The first question is trading and the profit and loss account, which is awarded 10.5 marks. Then the second one is a balance sheet. The total marks is 20. You can't afford to miss 20 marks. All right, let's get started. The name of the person is, or the name of the company is NPZ, right? So NPZ Limited, which is LTD's trading and profit and loss accounts for the year ended 31st. So where I'm getting this information is in the paper, NPZ. Now, the trading and profit and loss account, these are accounts that we are preparing. Then these accounts are prepared as the year is ending. Okay? Not on the actual date or as at, but as the year is what is ending or ended. For the year ending or ended 31st in December or August 2021. Okay, now the first column here will be for items. This one will be for adjustments or calculations. This is for Ngwe, Kwacha, and Ngwe. Now, yes.
So, meaning all the time on the title, it's always 31st as the date.
No, not really 31st. So August ends with 31st, right?
Yes.
How about June 30th? So you can't use 31st if the year, your financial year is in June, is ending in June. You can't write 31st because June ends when? 30th? Yes. So it will be ending 30th June. Okay. Now, the first item here is sales. So we're going to write sales here. Now, before you write your sales in the middle or final column, you double check if at all you have the what? Sales okay, sales returns or returns inwards. We check. Okay, sales is there, yes. Then sales returns is there. So meaning if sales returns is there, then sales goes where in the middle what? Column as 250 what? 1,150 00 what? Ngwe. Why are we putting, what do you think is the reason you are putting sales here, not in the final column? Anyone have an idea? Yes, Frederick?
So that we can subtract it with sales retained.
So that we subtract the sales retained, huh?
Yes.
Ah, very good. So since we're subtracting, we're going to write less sales retains. Okay? Less sales retains, and sales retains are amounts to 3,100. 3,100, 00 ngwe. We are subtracting, so let's put brackets to show that we are what? Subtracting. What is the difference?
24,000.
Is this 24 or 240? Okay, 247,050. Like this,
Yes.
So 247,000,050 ngwe. 00 ngwe. What do you call that figure? Yes? Net sales, okay? So it's called net sales or turnover, right?
Yes.
Net sales or turnover. So when they ask you, what is the net sales? Is the difference between sales and what? Sales retains. That's good. From here, we're going to write with the title cost of what?
Goods.
Cost of goods, huh? Cost of goods is a title. So let's put we underline. It doesn't have a figure. Then what is the next item?
Opening stock.
Opening stock. Opening stock. So we check. Now on our list here, we have two stocks separated by dates, right? So we have the one from 2020 and 2021. Which one is the opening stock? 2020, correct. So 2020 is 30 in the middle column. You always just write this one in the middle column as 37. It is 37,900. Then what do? You add purchases, right?
Yes.
We check. Yes, we have purchases. So I'm going to say add purchases. Okay, purchases. We check if at all we have these four things. Listen, hello. So we check if at all we have purchases, returns, or carriage in water, or even wages, just wages, not wages and salaries, but wages only. But we don't have wages. We have carriage inward. So purchases is 157,400 ngwe, and carriage inward. We're adding carriage inward, huh?
Yes.
Carriage inwards. Very good. Inwards is just 500. We are adding, right?
Yes.
So we're not going to put this one in brackets because we're just adding. Now when we add, it's going to be 00975 like this, huh?
Yes.
The reason why I'm writing this down here is because we need to subtract the purchases returns. Now, this is a mistake. I've done a mistake here. You don't write this down before you check if at all you have purchases returns. Yes, we have purchases returns, huh? So it is good you write this one down. If you don't have purchases returns, this one would have gone direct this in the middle column, huh? So it is fine. What do you call this figure after adding? Total purchases. Total purchases, huh? It's called total purchases. So to the total purchases here, we are going to subtract the purchases return. Since we are subtracting, we're going to write less purchases returns. Very good. We check how much purchases were retained.
Yes.
1,200. 1,200. By the way, this 00 ngwe. we're subtracting, so put this one in brackets like this. So, what is the difference?
156
156,
700.
700 like this,
Yes.
00 where they are.
Yes.
Okay. Now, what do you call this after subtracting? Net. It's called net what?
Purchases.
Net purchases. It's called net purchases because we have subtracted. Check. Sales minus sales returns is net.
Sales.
So, total purchases. Where's total purchases? Okay, total purchases, yes, minus purchases returns is net what?
Net purchases.
Net purchases. So, we come here. So, we're going to draw a line here. Then we're going to add these two. What? Okay, we're going to add these to add them. What is the sum?
It's 19.
We just write below this one, huh?
Yes.
1946
46 00.
00 like this,
Yes.
00 where?
Yes.
What do you call that figure, guys? Total stock
Available.
Available for what?
For the sale.
For sale. Oh, yes, it's available for total stock available for sale. So total stock available. Total stock available. Okay, total stock available. Now, to the total stock available, we are going to subtract the what? The closing
stock.
So since we're subtracting, we're going to write let's see closing what?
Stock.
Closing stock. Closing stock. Now we check. The stock that remained is the closing what? From 2021. Closing stock 30,003 what? 300, right?
Yes.
So 30,300. You subtracting, you underline. Guys, don't forget to subtract. What's the difference?
164.
In the last what?
In the last column.
164. 164.
300.
300. 164. 3 what? 300. What do you call that figure?
Cost of goods.
Yes. Cost of goods sold. Total stock minus the closing stock. Then the difference will be the cost of the goods. Sold. Yes, cost of sales. So that's you sold goods. Cost of goods sold. Yeah.
Yes.
Cost of goods sold. So you sold goods amounting to 164,300. 00 what? Ngwe. We will do that underline, right?
Yes.
Okay, we draw a line below that one. Then what do we do? We subtract,
Yes.
the net minus the total stock cost of goods,
Yes.
What are we having? How much are we having?
5.
Yes, that's a 5. Hurry up.
It's 82,750.
Okay, come this side. It's how much?
82,750.
82,700 what? 50. 00 what?
Good.
So this one minus this one,
Yes.
and this one is positive.
Yes, it's positive.
Then what is it called?
Net profit.
Net profit.
Yes.
Are you sure? Net profit. Tinashe, what is it called?
Net
Yes? Gross profit. It's called gross what?
Profit.
Gross profit.
But sir, how come gross profit?
Why gross profit, not net
Not
what?
net profit.
Net profit. Who can answer her question? Okay, so it is gross profit because we haven't yet subtracted the expenses. Okay, so this is gross profit and this is the end of the trading account. Right?
Yes.
So let's go to the profit and loss. So we're not going to use this party, we're going to use the other part. Okay?
Yes.
So let's go to the next part. Okay, so we continue. We finished the trading with a gross profit. Now we are going to the loss. Okay, a profit before we go to the loss account. Right?
Yes.
We're going to the profit account. Now, like I usually say in our local language, unganiale. After writing it, when you write the title before checking, ungasebwanje. Yes, so you check if at all you have income, right?
Yes.
So when we check here, we only have how many income? One, right?
Yes.
Discount received?
Received.
Discount received. So we can write the title,
Income.
add income. Okay? Add the income on the title. And we have discount what?
Received.
Discount received. Discount received. Now, since we only have one income, which is discount received, it's going to go direct to the last column, right?
Yes.
So that we add it to the gross profit in order to come up with the total income. Total income.
Yes.
Okay. So discount received is 5,400 Am I right?
Yes.
5,400. Now listen. Hello. Let me make you understand. You are in business, okay?
Yes.
You are in what?
Business.
You order your stock. That will be your opening stock when starting up what? A business. Now, it's not a guarantee that you are going to sell all the stocks, right?
Yes.
Everything you've ordered, you've purchased. So let's say you've ordered the 10 pens, okay? 10 pens. Then within a period of a year, you've sold how many? 6 pens, huh? Okay? 6 pens. Then how many pens are remaining? How many? 4. So those 4 are closing what? Closing stock. Okay? Closing stock. So total stock was how many? 10, huh? Then that was the opening stock and also total. So opening stock was 10. Then the closing stock was just 4. Then you ask yourself, how many stocks were sold? Okay, this is what we've been doing here. Okay, you've sold something, others retained goods due to a number of reasons. Why people, when they buy from you, then they retain. Maybe due to wrong sizes, wrong description, wrong color. Maybe they got damaged in transit. Whilst in transit, vapanika. Okay? Those may be some of the reasons. Maybe goods are expired. So they decide to return. Here is you who purchased your goods. Then you are given free transport. It's an advantage to you. That's why we add it to our purchases. Okay? But you've noticed that some of the goods are spoiled, or maybe wrong what size. So you've decided to return back the what? Return the goods to the owner. So that will be it's you who purchased. So it will be purchases returns. Are you getting something?
Yes.
So after calculating here, you will find the gross profit. You don't have any expense here. Okay? Direct expenses, yes, we have, but we don't have other expenses. Like salaries, insurance, electricity, advertising, we don't have. Okay, excuse me. So, whatever we're going to find here, we shouldn't be happy.
Happy.
This you shouldn't be happy about the gross profit, how much the gross profit is, because you don't know how much you spend. Don't know how much you do. You did what?
You spend.
Yes, you spend. Because expenses may be, the cost of expenses may be what? Higher than income. And you end up with net loss. So you can have gross profit here, but end up with net what? Net loss. You get the point, huh?
Yes.
Okay. Now, as you are ordering things, you may be given discount.
Discount.
Yes, discount when you order goods in bulk, okay, large quantities, you may be given a discount. That is called the trade discount. Okay, to you who has ordered the goods, who has received the discount, will be discount received. Instead of buying, let's say an item is costing 4 kwacha, then you buy it as 3 quarter 50 ngwe. Then your discount received is 50 what? 50 ngwe, right? That's why we write it here as income. Okay? So we are going to add this one to the gross profit, which is that side, right?
Yes.
So add the gross profit plus the discount received. What are you having?
88,150.
150?
Yes.
Like this?
Yes.
00. What do you call this one?
Total income.
Total what?
Income.
You are brilliant. Total income. You are brilliant. Still more. Don't be happy.
Yes.
Don't be happy. Even if you are the amount is getting what bigger, don't be happy because you don't know how much we spend. Okay, so this is where it's going to determine whether you're going to be happy in this business or not. All right. Less, huh?
Yes.
Expenses. Less expenses. Correct. Less expenses. Now, listen and listen very well. Less expenses. We check on the expenses, right? When you look at the list, from the land and buildings to the last one, which is closing stock, we have three expenses. Carriage outwards, wages and salaries, and what? What is this? Advertising. So we're going to write here carriage outward. Carriage outward. Who knows the difference between carriage outwards and inwards? Inward is added there to the purchases. But why carriage outward is an expense? Come on. Yes, Frederick.
Because you are paying for the goods that are being delivered. You
are paying for the transport, eh? Yes. So it means that you are the owner of the business, you are selling items. Let's say in furniture. Yes. Furniture. Then a customer comes to buy and say, when you buy from us, we're going to give you free transport as long as you are within the town. Okay? We're going to give you free transport. That free transport, you're supposed to pay for the driver for fuel, all right? And also servicing the vehicle. So to you is an expense. You the owner of the business, right? Yes. It's an expense. You're going to spend, Kaidi. Instead of the customer to pay for for the goods transport, you're going to pay. So you should include it as carriage outward. But here it's you who is receiving transport when you go and order items from the goods from the manufacturer, right?
Yes.
Good.
Sir, excuse me before you continue. So on add income, we have discount received. That's an income. So what if we had rent received? Then here we also have the gross profit. So meaning we first add the discount received and the rent received. Then the amount we add it to the gross profit.
So exactly. Thank you for the question. So the items, the income, if we had more than one item, right? then the 2 would have been here. Okay? Have been here. When you add the total, is the one you're going to add to the gross profit or gross loss. Okay? And just for only information, apart from discount received, you can also have dividend received, commission received, rent received. Right?
Yes.
Okay? And also, is it provision for bad debt? Huh?
Yes.
Let's proceed. Carriage outwards. Wages and what?
Salaries.
Wages and salaries. Oh, how much is carriage outwards? 59, huh? 5,900. Wages and salaries is this one is bigger one. 85,000. 800, 850, 850. Advertising. Advertising. I can't smile. Okay, it's fine. 5,400. Add for me these expenses.
97,150.
97,000.
150.
150. Right? What do you call that figure of other the expenses?
Total expense.
Total expenses. Guys, so look at this. Everything you are doing in business, ordering what everything is, selling blah, 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 and also give you the income you received there, 88,000. But check the amount you spend on carriage of goods and on paying wages and salaries, workers, and on advertising. Look at the total. It's what?
97,150.
97,000. So which one is big?
The expenses.
Expenses. Now, can you be happy if this is your business?
Not at all.
Not at all. Let's subtract that. So we always start with the total income or the gross profit, then minus the total expenses. Let's subtract.
$9,000.
It's negative, huh?
Yes.
Negative. So show negative, we're going to put it in brackets, show negative, right?
Yes.
Okay, let's put this one in brackets. Although we're going to write here as net loss, huh?
Yes.
How much? 90,000.
It's just 1,000.
Oh, 9,000?
Yes.
Guys, you have nothing. You have who?
Nothing.
You have nothing in your business. That year, 2020, 2021 financial year. So that one is not profit. It is net
loss.
Very good. It is net loss. So you can't smile. Even here, as we are preparing, the business is doing, wow, this is 2,000. This will determine whether you can be happy. Yes, you can smile or be what? Sad.
Yes.
Okay. We're done. This is the end of the trading and profit and loss loss account. Do you have any question before we go to the balance sheet? Because yes.
So, sir, what if the business has no expenses?
What if the business has no expenses? Who can answer that question? What kind of business is that? Yeah? Okay, what if the business has no what? Has no expenses? Then we end on total income. You have no net. Net, it means you have subtracted that.
Yes.
Hey, then you end on total what? Income. If you had income.
This would be our gross, our net profit.
Not net profit. Net means you subtract. Okay? You subtract from gross. So we've not subtracted. Why net?
So it will be just.
It will be just this. Yeah, because we have a bit of expenses.
Then is it going to help us prepare the balance?
Yes, it is. Okay. Yes. Well, this amount will go. Now, listen. If you didn't have income, then the gross profit will go to the balance sheet. But I've never seen such questions. And can you be in a business where you don't spend? Where you don't spend in a business where you don't spend? No, prepare to spend. Okay? Yes, you're going to spend. So let's go to the balance sheet if it's clear.
Yes.
Now, there are two things that you are going to get from this to the balance sheet. What are those items?
The net loss.
Net loss.
And the gross profit.
We're going to gross profit. Not gross profit. We're going to go with gross profit. We will go with this one because we have the expenses. So we'll go with this one and the closing
stock.
And the closing stock. Okay. So let's go to the balance sheet. Balance sheet. Welcome back again, guys. So this is a continuation of the first party, and we are preparing the balance sheet. Okay, so the name of the company is NP what? NPZ. Yeah? So it will be NPZ Limited. Balance what?
Balance sheet.
Balance sheet. When is the balance sheet prepared? As at that date, right?
Yes.
As at 31st August 2021. Now check nicely. Okay. This is for details, right?
Yes.
Details. This is for cost. This one is for depreciation. Yes. So let me just write DEP. Then here is for net book value, and which is abbreviated as NBV. This is kwacha, then ngwe, kwacha, ngwe, kwacha, then ngwe. Then what categories of items do we start with in the balance sheet?
Fixed assets.
Fixed assets. Very good. So we're going to write fixed what?
Assets.
Fixed assets. Fixed assets. Now, when you look at the items here, which are fixed assets?
Land and buildings, furniture.
Land and buildings and furniture. We only have how many? Two. Okay. So we're going to start with land and what?
Buildings.
Land and
buildings.
Land and buildings. Land and what?
Buildings.
Land and buildings. These are fixed what? Fixed assets. Remember, our business according to the net, the income statement is not doing well. We found the net loss. So we are in the next position of the business. We are going to know if the business has something of value. You can invest in the business. How many assets do you have in the business? How many Congole you have in the
business?
Okay. So cost is how much? 170,000. Now, depreciation, this is the loss in value of an asset. The loss in value, right? Over time, right? Okay. If you purchase a motor vehicle today, you're not at 1 quarter. You're not going to sell it at 1 quarter in the next 10 years. For it has what? For that time, it has lost value. Lost value. But according to this paper and our level of education, there's no depreciation here. Yes. No loss in value. So the same amount here is going to be put aside. Okay? So which is 170,000 what? Where another one is furniture. Furniture is 85,700 no depreciation. The same amount of 85,700 what? So we are going to add these We are going to add these. Okay. Now, when we add fixed assets, we're going to have what is called what? Total. Exactly. Total
fixed assets.
Fixed assets. Total fixed assets. How much?
1,200.
100,000 to.
There's a zero.
I mean, when you add 170 plus this one, isn't it 200 something?
No.
This is 8 what? 5,000. This is 170. Add the three zeros. I mean, 4 zeros here.
Oh, the 4 zeros. Sorry.
So it's going to be 0, 0, 7, 5, 3, 2. 235,700.
Yes.
Double check. Is correct, huh? Is correct, huh? 235,700.
No.
Is 230?
It's 255. 7.
Oh, this is 15. Yes, 255. Very good. 255, 7 what?
100.
700 there. So we're going to close here, just here. The reason why we're closing this side and then here we're just leaving it the way it is, according to this format we are using to prepare this balance sheet, is because we are still using this one down.
Yes.
So we're done with fixed assets. The next are
current assets.
Assets. Current assets. We'll start with closing stock. Closing stock. So let me just write stock. How much are the closing stock?
37.
It's here. 30,300. 30,300. Guys, do you still remember the net profit?
Yes.
The net loss, I mean.
Yes.
How much are they?
9,000.
9,000, right? So stock, then debtors. How much are the debtors?
1,000. 12,000. 1,000.
12,100.
No, 1,000.
Oh, so it's like 1
is 2. Let's see.
121,000. Oh.
Yes.
00 Guyan. Okay. Now, listen and listen very well. Do you have cash at bank? We have bank balance, right?
Yes.
So we're going to write bank balance. Balance. How much?
79,000.
79,000. Okay. Do you have cash in hand or just cash?
Yes.
You have cash balance, right?
Yes.
Cash. These are current assets. You have cash balance. How much?
6,000.
60,000.
Yes.
Okay. So add them. Add them. Come this side. Get your something. Okay.
There are 3 zeros, right?
Here 2 zeros, 3, 3, 3. Quickly.
It's 12,007.
No. This is 121.
127,400.
127,400, like this.
Yes.
Okay. So guys, you should be confirming that side. We don't want to waste time. Okay. Maybe we have made a mistake somewhere, then the balance it doesn't balance. You should be confirming, huh? So this is total current what?
Assets.
So total current
Assets.
assets. Okay, total current assets. Then what do? We go to the what? Current liabilities. Current liabilities. Since current liabilities are subtracting them, we're going to write less current
liabilities.
Less current liabilities. Okay, we underline like that. We draw a line. Now check if at all we have what? We have creditors. Creditors are also known as what? Creditors are also known as what? Account payables,
Yes.
Debtors account receivables. Do you have creditors?
Yes.
So we're going to write
Creditors.
creditors. Okay, like that. Do we have bank overdraft? No, why?
No.
So creditor is going direct here. How much are the credit payables?
221,000.
22,100.
22,100.
Like this?
And another zero.
Another zero?
Yes.
So 221,000?
Yes.
So, also, let me check. There's an error. Where? Total current assets is supposed to be?
236.
Yes. Because this one at least is supposed to be bigger than the liabilities.
236.
236
300.
300 like this, Okay. That's you see the reason why I told you to be confirming,
Yes.
You should be confirming so that we don't waste time, because it wouldn't have balanced if. So subtract. What is the difference? Quickly. Guys,
it's 15,300.
15?
Yes.
15?
Yes.
100 and what?
300.
Oh, it's 15,000. 15?
300.
3. Like this,
Yes.
00. What do you call this figure? What do you call this figure?
Total current liability.
No. Total current liability is we have subtracted.
Oh, working capital.
Yes, it's working capital. Working what?
Capital.
Working capital. So, capital. What is the working capital? This is the money that is used for a day-to-day running of the business. Paying workers, buying some office stuffs or office equipment. Yeah. Okay. Just stationery. Now we're going to add this one and this one to come up with net assets. So since we don't have space here, we're going to use the other the other side. Okay. So when you add total fixed assets and working capital, we're going to have net assets. How much are the net assets?
271.
In the last column, right?
Yes.
271.
000.
00. Another 0.
Yes.
Then 00 go ahead.
Yes.
Okay. So then let's close up this. Okay. Then we go to the financed by part. Yes. Proprietorship. So we're going to write financed by our business. This business of yours, which is making loss, it is financed by
capital.
It is financed by capital. You are right. It is financed by capital. So we're going to write capital here. Capital. Okay. Financed by capital. How much is capital? So capital here, 290,000. 290 what? 290 what? 1,000. Like this. Okay. So to that amount, we're going to add net loss. But since net loss is negative, it will be subtract. So we add, listen, it is negative 9,000. So it's going to be this amount plus negative, which is just minus. Positive times negative? Negative. So if it's net loss, we subtract. If it is net profit, we will do what? We add.
Yes.
So here we're going to write less net loss, eh?
Yes.
Because it's a loss. How much was it? 9,000, eh?
Yes.
9,000, and we're going to put in bracket. It's not that always will be subtracting, no, guys. If it is net profit, would have just would have what? Left it like that, eh? Okay, we'll just leave it the way it is. So when you subtract, what are we having?
20,000.
20,000. 20,000. So everything you're going to calculate here will be under the title financed what?
By.
Financed by. Okay, so we're going to just write the figure the way it is. Eh?
Yes.
Okay, so let's just write it down here. You can write it down or here, there's no problem as long as it balances.
But
With 30.
if we write it down there, it won't have a title.
No, just leave it the way it is. Okay, just leave it the way it is. Capital minus profit or capital plus profit, what do you have? It's still capital?
Yes.
Yes, it's still capital. Capital minus loss is still capital. So that's why it's just under financed, but this is under capital. All right. So when you subtract, how much do you have?
20,000.
20,000.
No.
No.
28. 1000.
1000 like this, huh? Then to this amount, we are going to add the long-term liability. Long-term liability. If you thought we have, but when you check nicely here, we have one. We don't have. So since we don't have, we're going to check if I thought you, the owner of the business, at some point you decided to do what? To withdraw some money or items from the business for personal
Use.
use. What do you call that? Drawings, eh? It is called drawings. But when you withdraw money from the business for office use, it's a contra entry. And it's going to reflect in the cash book there.
Yes.
So let's check. Do you have we do. So you took out 10,000 from the business. Drawings. It is 10 what? 10,000. So we subtract, eh?
Yes.
We subtract. So listen and listen very carefully. Eh? You guys who are running businesses, the businesses is not yet stable to be to start paying you, right? To start paying you so that you put yourself on salary. But also ndalama. So make it a habit or a discipline. Just discipline yourself that anything I'm withdrawing from the business, I'm supposed to pay back. Okay? Any amount I'm getting from the business for personal use.
Yes.
You want to buy your girlfriend talk time, you want to buy your boyfriend something from the same business, from the business, make sure you take back the what? You pay back the money, You pay back the money to the business because you are suffocating the what? The business. Okay? If it's a business, if my mom went on vacation, it's a business. No, you are suffocating the business. Make sure you pay back the money. Are we together?
Yes.
Okay. If it's now stable, you can put yourself on salary, right? Now putting yourself on salary is so trader. It's like business. Business yako. Also faka check up. Your business is making 1,000 profit. Then if you salary yako in 2,000. Guys, nine way. Okay, let's finish up this. So when you subtract 281,000 minus 10,000, what are we having, madam, there?
271.
So in the last column, why?
Yes.
271,000 where?
Yes.
How do you call that figure? Proprietorship or capital?
Employed.
Very good. Capital employed. Now, this is the point where unganyale. Another point where
unganyale.
Yes, ungaoneke. Because this amount must be equal to the net
assets.
Are they identical?
Yes.
Yes.
Meaning, from the word go, we've been doing the right what? The right thing. So this balance sheet has balanced, and the 20 marks is ours. Oh, balance sheet and the trading eye.
Yes.
Since when the balance sheet balances, it means that the trading account was okay, because it would not have balanced because net loss. Right?
Yes.
Questions?
Sir, what if we didn't have drawings?
What if we didn't have drawings? We got anything from the bank. This one would have gone direct there. This amount would have gone would have been this side. Yes.
But it wouldn't have been the same.
Yes.
It's okay.
It will be the same.
So
it will be the same.
Oh, it will be the same.
Yes, that's why it's balance sheet.
Okay.
So it's not always that we're going to have drawings. Okay, sometimes you can say, no, I'll not take anything in the business for this year, but it's difficult. It's what? Difficult. Maybe this is the business from the sale of, let's say we have two businesses, right?
Yes.
Then one of the businesses, Niamene NPZ Limited, you say, oh, in that business, I don't want to get anything for the whole year, 2020, 2021. Alright?
Yes.
I'll not get anything. Then you will not have drawings here. Okay? Then you have other businesses, maybe you're working, right? You're working there. You have enough money. You don't want to support the business. So now, an investor will come and look at the balance sheet. If someone wants to invest in your business, right?
Yes.
Or a shareholder, will come and see how much assets you have, okay, or how many assets you have total, how many debts you have. Because some businesses have Ngongole. See, long-term loan, just maybe few creditors, few creditors amounting to 221. This is very cool. Now is one Congole Malapula. Oh, we are okay. So thank you so much, guys. This is the end of our presentation in form of business studies. We're answering the question 3, 2022 grade 9 external. All right. So with me, what's your name again?
Loveness Madimusa.
Loveness Madimusa. See you next time. Thank you so much.
So guys, if you think this video was so helpful, if you think it has really helped you, please like and subscribe for us.
Thank you.
Wacho mwenso wakushala kumulu